earlier this week, we put the latest growth forecast out of AIG in the spotlight and explored growth prospects for Kenya moving forward. We had that economic report saying that growth is projected to be between 1.5% and 2% for this year. What are you penciling in from some of the other commentary we've seen around economic growth in Kenya so far?
Well, of course, we had the IMF update their World Economic Outlook fairly recently. And then this week we also saw the Kenya Institute for Public Policy Research make their own updates on growth, and they've published the first sort of economic outlook report this week. And their forecasts are very similar to the IMF numbers. So we're talking about 3.5% for this year, and then, for next year, and that is up from about 2.25% this year, which of course shows an incremental improvement from what was at 1.5% in 2008 following the election violence. And I think that makes sense. The Research Bureau highlighted issues around the drought, which we've been talking about for a long time. They've obviously highlighted the issues of the global slowdown on the impact on exports. And then lastly, also the failure of the government to properly make proper political reforms to encourage investment confidence in the local economy. Now, unfortunately, on the latter, that is still sitting in the system. And unless the government really manages to address that issue in the coming months, unfortunately that's going to remain in drag. But hopefully rain is improving on the one side in the fourth quarter, and then also global economic growth is sort of recovering, and that will help. We've
also seen an encouraging report out of the tourism sector itself, suggesting that we've got tourism revenues having jumped 10% to 36.6 billion shillings. Are you buying into that?
Well, keep in mind that 2008 was, of course, a horrible year for tourism in Kenya. So the base is low. So it's not surprising to hear of some form of an improvement, at least in numbers of tourists. What's not clear to me, though, is there's some inconsistency between their numbers and what the central bank is publishing. Because the central bank publishes a net tourist number, shouldn't add, but their numbers are down something like 25% for the first half of the year, which either means that there's been humongous growth in outward tourism, or maybe the Tourism Bureau is overstating the inflow a little bit. So it's not entirely clear to me.
Well, let's bring Fred Moturi in from Genghis Capital. He's joining us live from our studios in Nairobi. Fred, I mean, we've seen this tourism report. What has the market made of it? Has there been any reaction in the tourism stocks specifically?
Thank you very much. It is true that we have seen data streaming in that tourism is beginning to pick up. We have had news of increased charter flights into Kenya from Europe and the East. We have seen companies like TPS Serena taking advantage of it and placing infrastructure to be able to benefit from it. For example, they have been opening up new hotel facilities within the Greater East Africa region. So it is true that tourism is beginning to be on the rise, but also we have to take into account that the previous year we had a slump in tourism because of the post-election violence. So coming from a low point to where we are definitely going to see some significant increase in tourism.
In that context, how are you playing KQ right now?
KQ has been increasing from a price of 19 shillings to yesterday about 24 shillings to 25 shillings. Kenya Airways has also been, they have promised to open one route every month. This past month they opened 3 routes. They have been about 70 to 80% on time on all their flights. So definitely we are seeing KQ being given a lot of airtime by investors.
Well, certainly the company as well making strides in actually improving and expanding on its routes as well.